They call him the Oracle of Omaha, the gentle billionaire, the man who still lives in the same house he bought in 1958, who eats McDonald's for breakfast and sips cherry Coke like a kid. That's the myth. That's the carefully polished story Wall Street feeds you. But I need you to understand something tonight. Warren Buffett didn't become the fourth richest man on earth by clipping coupons, buying Coca-Cola stock, and waiting patiently. That's the bedtime story. The truth? His empire is built on power plays, crisis exploitation, political connections, and financial secrets most people will never touch in their lifetime. This is not a bedtime story. This is a dissection, a scalpel cutting through the illusion of humility and folksy charm. And when we're done, you'll see Buffett not as the grandfatherly investor, but as one of the most ruthless architects of modern finance. The public image versus the shadow reality. Every documentary shows the same image. Buffett driving himself to work in a modest car, walking into an ordinary office, joking about hamburgers. It's brilliant PR, because while you're distracted by the image of simplicity, Buffett is pulling off financial maneuvers so sophisticated that even hedge fund managers can't replicate them. Buffett mastered the art of invisibility. He plays the role of your friendly financial neighbor, but behind the curtain, he's negotiating preferred stock deals with 10% yields, warrants that guarantee billions in upside, and sweetheart arrangements that ordinary investors could never dream of. While you're buying Coca-Cola shares at market price, Buffett is being handed custom contracts directly by CEOs begging for his capital. That's the shadow Warren Buffett. Secret number 1, he profits most in crises. Buffett has a line: "Be fearful when others are greedy and greedy when others are fearful." People quote it like gospel, but let's decode what it really means. In 2008, when the world was collapsing, banks were failing, and governments were panicking, Buffett swooped in like a shark. He wasn't just buying stocks cheap. No, he was writing private deals nobody else could access. With Goldman Sachs, he negotiated a $5 billion investment. Not common stock like the public could buy, but preferred stock that paid him a 10% annual dividend, plus warrants to buy $5 billion more shares at $115 each. Goldman needed a savior. Buffett became the lifeline, and in return he minted billions. With Bank of America, when the stock was cratering, Buffett again cut a deal. $5 billion in preferred stock at 6% annual dividends, and the option to buy 700 million shares at $7.14. That option alone turned into over $12 billion in profit. These are not investments. These are extractions, crisis arbitrage, deals crafted when the world was burning, when CEOs were desperate, when governments looked the other way because Buffett was seen as the trustworthy savior. He didn't save Wall Street. He leveraged Wall Street's desperation. That's his true genius. Secret number 2. The political shield Buffett plays humble, but he is politically connected at the highest levels. His investments in banks during the 2008 crisis, they were blessed by the U.S. Treasury. He had access. He had guarantees. Do you think it's an accident that Buffett publicly supported higher taxes for billionaires, all while his own company, Berkshire Hathaway, fought with the IRS for years over back taxes worth over $1 billion? That's the paradox. Secret number 3, the insurance machine. Now here's something almost nobody outside finance fully grasps. Buffett's true engine of wealth isn't just Coca-Cola stock or Apple shares. It's insurance float. What does that mean? Imagine you run an insurance company. People pay you premiums today, and you might not have to pay out claims for years. That money sits in your hands, billions of dollars waiting. You can invest it. You can grow it. And as long as you can eventually cover the claims, you pocket the profits. Buffett built a multi-hundred-billion-dollar war chest using this mechanism. Companies like GEICO, General Ray, and National Indemnity feed him tens of billions in float every year. This is capital that costs him little to nothing. Sometimes it even costs negative interest because policyholders keep paying in. Think about it. While ordinary investors save up their paychecks to buy stocks, Buffett commands a perpetual river of other people's money to deploy however he wants. That's leverage on a scale no retail investor can match. And here's the kicker. It's legal. It's brilliant. It's invisible to the average observer. Secret number 4, the good guy illusion. Buffett constantly warns against derivatives, calling them weapons of mass destruction. But Berkshire Hathaway quietly held and profited from billions in derivative contracts. He denounces Wall Street excess publicly, then privately uses its tools when the odds are stacked in his favor. He tells you to buy index funds, dollar cost average, and hold for decades. But he himself cuts private sweetheart deals, negotiates bailout terms, and structures contracts designed to win no matter what. Do you see the contrast? What Buffett tells the public is a fairy tale. What Buffett does in private is a masterclass in asymmetric advantage. He's not lying. He's performing. He's keeping you calm while he operates in an arena you'll never touch. Secret number 5. Control through simplicity. One of Buffett's greatest weapons is psychological. He hides the complexity of his empire behind the mask of simplicity. He jokes about loving Dairy Queen, but Berkshire owns railroads, energy companies, insurance giants, banks, tech investments, utilities, manufacturing, consumer brands, and more. It's a shadow economy in itself. He talks about reading 500 pages a day, but what he really does is deploy capital with military precision, controlling industries quietly from behind the curtain. He preaches patience, but his deals are often structured with aggressive terms that guarantee Berkshire profits even in worst-case scenarios. The simplicity is the camouflage. The complexity is the reality. The lesson hidden in plain sight. So what's the real takeaway from Buffett's darkest investment secrets? It's not that he's evil. It's not that he's untouchable. It's that he plays a different game. While the public is told to think like small investors, Buffett operates like a sovereign state. He has access to deals you'll never see, float you'll never touch, and political leverage you'll never hear about. But here's the good news. By studying his shadows, you can learn the mindset. You can see the game for what it really is. And once you see it, you'll never look at Warren Buffett or the financial system the same way again. The lesson hidden in plain sight. So what's the real takeaway from Buffett's darkest investment secrets? It's not that he's evil. It's not that he's untouchable. It's that he plays a different game. While the public is told to think like small investors, Buffett operates like a sovereign state. He has access to deals you'll never see, float you'll never touch, and political leverage you'll never hear about. But here's the good news. By studying his shadows, you can learn the mindset. You can see the game for what it really is. And once you see it, you'll never look at Warren Buffett or the financial system the same way again. The network of alliances. Buffett doesn't operate alone. He has built one of the most strategic networks of alliances in the financial world. Think about this. When Buffett invests in a company, CEOs don't just get money, they get his brand, his name, his reputation. That instantly stabilizes markets, calms investors, and attracts new capital. Buffett knows this, and he uses it. He has relationships with the heads of the largest banks, with regulators, with governments. In times of crisis, when the phone rings in Washington, Buffett is not just another billionaire. He's the trusted voice. Why? Because he's cultivated that image for decades. But remember, image is a weapon. His alliances are not random friendships. They are carefully built pressure points. Buffett knows that money moves through trust, and he has made himself the single most trusted figure in global finance. Behind the curtain, this means one thing: access. Access to deals, access to regulators, access to insider flows of information that shape his decisions before the public even sees what's happening. Railroads, the silent empire. Most people think Buffett's fortune comes from Coca-Cola or Apple stock. Wrong. One of his biggest plays was railroads. In 2009, Buffett made his boldest move. Burlington Northern Santa Fe Railway, BNSF. Berkshire Hathaway bought the entire company for $34 billion, the largest acquisition of his career. Now ask yourself, why railroads? They're old, unsexy, boring businesses. The answer is control. Railroads are arteries of the American economy. They transport coal, oil, consumer goods, agricultural products. Without railroads, the economy stops. Buffett understood this better than anyone. By owning BNSF, he wasn't just buying a business. He was buying leverage over the flow of commodities across America. Think about the scale. 7,500 locomotives, 32,500 miles of track, 10,000 trains moving every day. Buffett's empire literally moves the economy. And while Wall Street chases tech stocks, Buffett sits back, collecting billions in cash flow from rail transport, cash that fuels his war chest. This is Buffett's real genius. He buys the infrastructure that others overlook, the foundations of society that can't be replaced. He doesn't just buy stocks, he buys the veins and arteries of civilization, utilities and energy, quiet domination. But Buffett didn't stop with railroads. His company, Berkshire Hathaway Energy, has become one of the largest utility owners in America. Power plants, natural gas pipelines, wind farms, solar fields, all under his control. Utilities are not glamorous, but they are essential. Everyone needs electricity. Everyone pays the bill. And here's the dark genius. Utility companies are regulated monopolies. That means guaranteed profits, limited competition, and predictable cash flow. Berkshire Hathaway Energy controls power for millions of households. That's not just money, that's influence. Because when you control energy, you control leverage over governments and local economies. Buffett hides this under the boring investor mask. But the truth is, he's consolidating control over industries the world cannot live without. Transportation, energy, insurance. The invisible skeleton of modern life, the Apple play. Here's another secret. Buffett resisted tech stocks for decades. He claimed he didn't understand them. Then, in 2016, he shocked the world by buying into Apple. But look closely. This wasn't about tech. This was about cash flow. Apple prints money. Billions in profits every quarter, massive dividends, endless buybacks. Buffett saw not just a company, but a machine for compounding wealth. He didn't buy Apple because it was cool. He bought it because it was a fortress, a brand so powerful, so globally entrenched, that it would generate rivers of cash for decades. And here's the kicker. Apple now represents nearly half of Berkshire's stock portfolio. That's how ruthless Buffett is. When he identifies a fortress, he bets big, far bigger than the average investor would ever dare. It's not diversification, it's concentration. Because Buffett knows that empires are built not by spreading thin, but by doubling down on inevitabilities. The weapon of patience. Now let's talk about one of Buffett's most misunderstood weapons, patience. The public thinks patience means waiting 30 years for Coca-Cola stock to go up. Wrong. Buffett's patience is strategic. He waits like a predator. He lets opportunities ripen. He builds war chests of cash, sometimes over $100 billion just sitting there. And when a crisis hits, when markets panic, when CEOs are desperate, that cash becomes a weapon. He can write checks nobody else can. He can demand terms nobody else would dare ask for. Patience is not passive. Patience is power storage. Buffett hoards power until the moment comes to unleash it. The dark side of influence. Buffett's influence extends far beyond his portfolio. His annual shareholder meetings in Omaha are called the Woodstock of capitalism. Tens of thousands attend. Media covers it like a religious event. Politicians quote him, investors worship him. This influence is not an accident. Buffett has turned himself into a brand that disarms critics, seduces investors, and shields him from scrutiny. Do you know how powerful that is? When people believe you are the good guy billionaire, you can make moves others would be attacked for. You can lobby for your interests while claiming moral high ground. You can shape markets with a single sentence. Buffett once joked that derivatives were weapons of mass destruction. The market trembled. That's power. That's more powerful than any trade he's ever made. His words alone move billions. And behind the jokes, the cherry cola, the grandfatherly smile, lies a man who has mastered the art of perception warfare. The ruthless lessons. So what are the real lessons from Buffett's darkest secrets? Own the infrastructure. Don't just buy stocks. Own the arteries of society, transportation, energy, finance, the things that can't be replaced. Exploit crises. Don't fear downturns. Use them. Crises create desperation, and desperation creates opportunity. Buffett became Buffett by writing ruthless crisis deals, build political capital. Let's take a step back and look at the bigger picture. Warren Buffett didn't just build wealth, he built immunity. Immunity to market collapses, recessions, political upheavals, and even public outrage. Many see Buffett as a flawless investor, a saint of the stock market. But here's the truth few understand. Buffett's genius lies not in always being right, but in making sure that when he is wrong, he loses nothing. And when the market collapses, he gains everything. The hidden fortress, Berkshire Hathaway. Berkshire Hathaway is not just a holding company, it is a financial fortress. Look at the numbers, billions of dollars in cash reserves, insurance float that gives Buffett access to hundreds of billions in investment capital without borrowing. A diversified empire spanning railroads, energy, insurance, consumer goods, finance, and tech. But here's the subtle genius. The empire is layered like a fortress. Each subsidiary operates independently. Risk is compartmentalized. If one business fails, the others are untouched. Insurance companies generate capital, the float, that Buffett invests elsewhere. The public sees premiums, Buffett sees leverage. Cash piles accumulate not for ego, but as fuel for crisis moments. When panic hits, Buffett strikes. Every move is premeditated. Every layer shields him from volatility. Most investors see Berkshire as a stock they can buy. Buffett sees it as a living, breathing system designed for survival and dominance. The Buffett cover story. Buffett's public image is carefully curated. The frugal billionaire who lives in the same house he bought in 1958. The man who prefers cherry Coke and sees candies. This isn't just personality, it's strategic camouflage. While the world focuses on his humble lifestyle, Buffett is quietly running a global influence network. Media loyalty ensures that his mistakes are minimized in public perception. Political leverage shields him from regulatory pressure. Competitors underestimate him because he projects simplicity. This is classic illusion management. Buffett's empire operates on two layers: visible normalcy and invisible power. Aladdin, the hidden weapon. Many people don't realize that Buffett's empire uses BlackRock's Aladdin platform, a system so powerful it manages trillions of dollars of risk globally. Aladdin is a risk management, portfolio tracking, and predictive analytics system that aggregates market data, forecasts trends, and optimizes capital allocation. While most investors react to markets, Buffett and his inner circle predict market pulses before they happen. Aladdin doesn't just watch, it interprets, simulates, and signals opportunities. This is why Berkshire can survive disasters that wipe out competitors. It's not luck, it's information asymmetry. They see the tides before anyone else steps into the water. Buffett's darkest investment philosophy. Buffett is known for value investing. Buy undervalued companies, hold forever, but the dark secret is the control principle. Buffett doesn't just buy companies. He buys control over decisions, influence over boards, and leverage over industries. Insurance companies give him float. Float gives him capital. Capital gives him power. Railroads give him access to supply chains. Utilities give him influence over infrastructure. Media stakes give him influence over perception. Each investment isn't chosen just for return. It's chosen for strategic dominance. The money is secondary. Control is primary. Crisis as a playground. Buffett's empire thrives on what terrifies others. Crises. Think 2008. The financial system collapsed. Hedge funds melted. Banks failed. Ordinary investors panicked. Buffett did not. He bought preferred shares in Goldman Sachs with guaranteed dividends. He lent capital to Bank of America with upside warrants. He acquired companies at distressed prices that others couldn't touch. While others were fleeing, Buffett was methodically turning chaos into opportunity. This is why his success is often mischaracterized as luck. It is strategic patience combined with invisible influence. The Berkshire Insurance Engine insurance is not just a business for Buffett. It's the backbone of power. Here's how it works. Premiums come in. The company holds them, float, until claims are paid. Buffett invests that capital in high-return assets. The world thinks this is ordinary. It isn't. Float is capital you control without owning it. Claims are predictable, so risk is managed. Profits compound invisibly, untaxed, and uninterrupted. This system allows Buffett to deploy billions instantly while most investors scramble for loans. It's leverage at a scale that borders on omnipotence. The power of reputation. Buffett's reputation is more valuable than any single investment. Why? Because reputation acts as capital. Banks lend him at favorable rates because he is Buffett. CEOs open their companies because he is trustworthy. Politicians listen because he is admired. Reputation isn't just a social tool, it's currency. It lets him negotiate deals others cannot. It lets him access opportunities invisible to the public. Berkshire Hathaway's market. Influence. Berkshire doesn't just participate in markets, it moves them. A single announcement of Buffett buying a stock can trigger billions of dollars in movements. Retail investors follow blindly. Institutions hedge. Analysts write stories. This is influence masquerading as investing. Buffett controls perception. He controls liquidity. He controls market psychology. Lessons for the strategic mind. Now, if you want to extract value from all of this, the dopamine hit, the knowledge your audience craves, here are the principles behind Buffett's shadow game. Leverage unseen assets. Cash, insurance float, reputation, influence, not just stock. Layer control, not just ownership. Each company, each stake, each subsidiary adds a new level of power. Crisis is opportunity. Patience turns fear into profit. Camouflage. Public image is a tool. Make the world underestimate you. Data is king. Platforms like Aladdin convert information into foresight. These principles are why Buffett is more than an investor. He is a strategist, tactician, and architect of power. Let's go deeper. Up until now, we've seen the surface. Berkshire Hathaway, cash piles, insurance float, Aladdin, and Buffett's legendary patience. But the real secret, the part most people never hear, lies in the hidden partnerships, the invisible networks, and the way Berkshire's subsidiaries interact like a perfectly orchestrated machine. The hidden web of influence. Berkshire Hathaway isn't just a company, it is a network of power nodes. Every subsidiary is a point on a vast web. GECO feeds Berkshire with billions in predictable float. BNSF Railway gives leverage over logistics and commodity movement. Berkshire Hathaway Energy ensures influence in utilities and long-term energy markets. Precision Cast Parts gives industrial dominance. Individually, these are successful businesses, but together, they form a self-reinforcing ecosystem. Cash flows cross between entities. Investments are coordinated. Information travels quietly. Decisions are made at the top, executed at the bottom, without the public ever seeing the threads connecting them. This is why Buffett can move billions without triggering alarms. Ordinary investors see each business in isolation. Buffett sees a lattice of influence, risk mitigation, and capital efficiency. Insider knowledge loops. Buffett has cultivated insider knowledge networks, not illegal insider trading, but legal high-level information flows. CEOs call Buffett first. Regulators discuss policy outcomes with trusted advisors. Industry reports are synthesized and delivered to him before the public can react. This gives Berkshire a predictive advantage. When new regulations or economic shifts appear, Buffett already knows how to position assets to maximize upside and minimize risk. Information isn't just power, it's leverage, and leverage is the currency of empires. The subsidiary synergy. Most companies operate in silos. A railway doesn't communicate with an insurance company, which doesn't communicate with an energy provider. Berkshire doesn't do that. Subsidiaries are autonomous yet interconnected. They share intelligence where it benefits capital allocation. They coordinate risk. They signal opportunities and threats across industries. For example, BNSF Railway may see commodity shifts first. Buffett uses that insight to adjust investments in energy or manufacturing. GEICO's float is then deployed to seize undervalued assets that arise from market volatility. The synergy isn't obvious to outsiders. It's hidden in plain sight. To the market, Berkshire looks like a diversified conglomerate. To Buffett, it's an information-powered empire, a living organism of capital and intelligence. Psychological advantage. Buffett's empire thrives on psychology. He understands human behavior better than almost anyone. Retail investors panic. Hedge funds over-leverage. CEOs fear making mistakes. Buffett exploits all of it. He doesn't just invest in undervalued companies. He invests in situations where fear and emotion distort price. He leverages the psychological weaknesses of others while staying emotionally detached. This is why value investing alone is not his secret. Value investing is public knowledge. His psychological insight is what turns value into dominance. The Buffett Doctrine. Control through subtlety. Here's a pattern few notice. Buffett rarely announces a hostile takeover. He rarely makes a move that seems aggressive. Instead, he absorbs influence quietly. He buys stakes incrementally. He sits on boards quietly. He offers support, advice, and resources before making controlling moves. This creates a consent-based empire. People willingly let him in. They trust him. They align with him. And once aligned, the systems of power quietly shift under his guidance. The power of patience. Patience isn't just waiting. Buffett's patience is strategic timing. He accumulates cash for decades. He studies cycles. He positions before crises. When the world panics, Buffett moves like a predator. When everyone else is frantically selling, he is calmly acquiring. The apparent slow pace of Berkshire is deliberate misdirection, a way to operate under the radar. Time is his ally. Others fear it. He leverages it. Hidden deals and private negotiations. Buffett's empire is built on private negotiations invisible to the public eye. Billion-dollar deals are struck behind closed doors. Competitors never know until the transaction is complete. Terms are carefully crafted to maximize upside while limiting exposure. These are not reckless risks. They are pre-structured asymmetrical bets. The downside is controlled. The upside is potentially infinite. Layered investment strategy. Berkshire's investments are layered for resilience. Core holdings. Companies Buffett fully controls or has significant influence over. Strategic minority stakes. Companies he cannot control, but where influence and information are valuable. Float deployment. Leveraging insurance capital to invest opportunistically. Private deals and acquisitions, hidden from public scrutiny until completed. The layering ensures redundancy, resilience, and leverage at every level. If one layer fails, others maintain the empire. Buffett's secret advantage. Asymmetric information. The most dangerous tool in Buffett's arsenal is asymmetric information. Ordinary investors rely on public filings. Hedge funds rely on models and trends. Buffett relies on networks, intelligence, timing, and execution. This creates a predictable advantage. The world reacts. Berkshire acts. By the time others respond, Buffett is already 10 steps ahead, controlling liquidity, perception, and opportunity. Buffett's darkest tactic. Float. Arbitrage. Insurance float is not just cash. It's a leverage machine. Premiums come in before claims are paid. Buffett invests this capital in opportunities far above the interest owed to policyholders. Returns compound invisibly. It's an arbitrage of time, information, and capital. Millions of dollars flow daily, unnoticed by competitors. This silent machine generates billions over decades. Strategic alliances. Buffett has mastered alliances that reinforce power. Partners like Charlie Munger create decision-making clarity. CEOs of Berkshire subsidiaries report directly to him, yet operate independently. Media, regulators, and banks are all aligned indirectly through reputation and influence. This network is invisible yet omnipresent. Every alliance strengthens the structural integrity of the empire. Lessons for the listener. So, what can you extract from all of this, distilled into actionable insight? Think in systems, not trades. Invest in structures, not just stocks. Leverage invisible capital. Identify underutilized resources you can control. Patience is power. Timing is as valuable as information. Build influence networks. Capital is amplified by relationships and reputation. Operate invisibly. Public perception is a tool. Use it strategically. Crisis is opportunity. Train your mind to see the upside in chaos. Buffett is more than a man. He is a blueprint for strategic empire building. Each principle we've covered, float, subsidiaries, networks, patience, reputation, is replicable, even if at a smaller scale. And now, with this knowledge, you understand why Buffett isn't just rich. He is untouchable, invisible, and perpetually empowered. Let's take it a level deeper. Up until now, we've examined Berkshire Hathaway as a machine, the invisible network of subsidiaries, float arbitrage, patience, and psychological leverage. But now we focus on Buffett's influence on the broader financial ecosystem, political leverage, and market perception, the aspects most people never see, yet which define why he operates on an almost untouchable level. Market influence. The quiet hand of Buffett. Buffett doesn't just invest. He orchestrates markets silently. When Buffett buys shares in a company, it isn't just a purchase, it's a signal. Hedge funds, institutional investors, and retail traders watch and react. Yet his moves are layered and calculated. Public filings disclose only what the law requires. The true magnitude of influence is invisible until it's already in motion. This creates a predictable ripple effect. A single announcement can move billions across markets without Buffett ever acting publicly. This is the principle of market influence through subtlety. The less you broadcast, the more control you maintain. Most investors scream, tweet, and act emotionally. Buffett whispers and lets the system bend to his advantage. Political leverage, influence, without force. Buffett's empire doesn't just play the market, it plays policy. Meetings with regulators, legislators, and central bank officials are never just social calls. They are opportunities to shape understanding, preempt policy shifts, and ensure operational freedom. Contributions to think tanks, charitable foundations, and political campaigns indirectly secure goodwill and influence without public scrutiny. Buffett operates in a dimension where politics and finance intersect, leveraging relationships instead of coercion. While others react to regulation, Buffett aligns the system with his strategy. The myth of luck. People often attribute Buffett's success to luck or timing. This is a myth carefully perpetuated to maintain his persona as the humble oracle of Omaha. Every move is backed by decades of analysis, industry insight, and strategic planning. Buffett's simple investments are the result of advanced risk calculation, behavioral psychology, and multi-layered capital structuring. Understanding this reveals the real secret. Buffett's luck is a byproduct of preparation, timing, and network intelligence, not chance. Aladdin and technology, modern tools of influence. Buffett, historically cautious about technology, has adopted Aladdin and other analytical systems to manage risk and predict market flows. Aladdin isn't just software, it's a real-time map of global capital, correlations, and exposures. With these systems, Buffett can anticipate crises, hedge intelligently, and deploy capital with precision unseen by competitors. The lesson here: even the most legendary investors leverage technology as force multipliers. Brilliance alone isn't enough. Systems amplify intelligence exponentially. The dark side of public perception. Buffett's public persona is carefully curated, humble, frugal, approachable. But behind this image lies a strategic masterclass in controlling narrative. While millions of retail investors mimic his public advice, the real moves happen quietly, legally, and invisibly. This creates a behavioral arbitrage. The public is predictable, Buffett is not. Market swings caused by human emotion become opportunities for invisible accumulation. The Berkshire safety net. Another key to Buffett's dominance is operational insulation. Berkshire subsidiaries operate independently, but benefit from a centralized risk strategy. Profitable entities cross-subsidize riskier ventures. Losses are absorbed quietly while gains compound invisibly. This approach ensures resilience in crises, such as 2008 or unexpected geopolitical shocks. It's a principle rarely taught. Protect your downside relentlessly while letting the upside accumulate unhindered. Secret strategies for ordinary investors. Buffett's techniques are hidden, yes, but the principles can be adapted for smaller scale. Identify predictable cash flows. Insurance float is massive at Buffett's scale. At your scale, it's subscriptions, SaaS businesses, or recurring revenue streams. Invest in psychological edges, observe where fear or greed distorts prices, and position yourself strategically. Leverage patience as power. Wait for optimal conditions. Avoid impulsive market noise reactions. Diversify influence, not just assets. Build networks of knowledge, intelligence, and collaborators. Influence compounds like capital. Layer risk strategically. Separate operational roles, protective structures, and high-return ventures. Even small layers reduce catastrophic risk. These lessons are translatable even without billions. They're about thinking in systems, patterns, and invisible leverage. The final secret: visionary timing. Buffett sees beyond the immediate horizon. While others react to daily news or quarterly earnings, he positions decades ahead. Regulatory landscapes, technological shifts, demographic changes, global crises. This long horizon thinking turns ordinary investments into decades-long compounding machines. It's not just money, it's control over outcomes. The takeaway: when you combine all the elements, invisible networks of subsidiaries, legal, compliant, layered entity architecture, psychological insight and market influence, strategic patience and timing, information asymmetry, and modern analytics, you begin to understand why Warren Buffett is not just an investor. He is a master of invisible empire building, a sovereign of financial flow, and a blueprint for strategic domination. Every public move is the tip of a massive coordinated structure. Every private decision ripples across markets in ways the public never sees. And this is why the Oracle of Omaha will always appear humble while quietly moving billions of dollars through invisible channels, subtly shaping markets, influencing policy, and compounding power with surgical precision. Now let's go deeper. We've covered the mechanics of Berkshire Hathaway, the psychology, the invisible networks, and the systems. But there's another layer: the personal rules, hidden networks, and psychological mastery that Buffett has applied for decades, quietly shaping markets and mentoring billionaires behind the scenes. This is the part few ever see, and it's where the real secrets live. Buffett's personal rules: discipline as domination. Buffett's success is rooted in a few simple but ruthlessly applied principles. Never lose capital. Not a cliché. This is a core obsession. Every investment is measured against its worst-case outcome before the potential upside. Invest in what you understand. The circle of competence rule. He does not gamble. Every decision is calculated within his sphere of knowledge. Time is the ally, not the enemy. Buffett allows investments to compound over decades, ignoring the daily noise of Wall Street. Psychology over numbers. Markets are influenced more by human emotion than intrinsic value. Buffett manipulates his own psychology to remain calm while letting others panic. These rules are simple on paper but nearly impossible to follow consistently. They require a mental operating system calibrated for discipline, patience, and ruthless clarity. Mentorship and invisible networks. Buffett didn't rise alone. Behind him is a network of advisors, confidants, and protégés that amplify his intelligence. These networks are closed, selective, and strategic. Charlie Munger, the longtime partner who shapes thinking beyond finance into philosophy, ethics, and human behavior. Family connections. Buffett carefully mentors his children, ensuring knowledge and strategies are retained across generations. Investment advisors and fund managers. Subtle inputs that expand insight without adding noise. This is why Buffett doesn't need to act publicly to influence billionaires or hedge funds. His invisible network spreads decisions, strategies, and crisis mastery, turning chaos into opportunity. Buffett thrives in crisis. 2008, he injected capital into companies when fear was paralyzing the market. COVID-19, strategic acquisitions and repositioning occurred while others panicked. Geopolitical instability. Buffett's long-term approach allows him to ride uncertainty, absorbing volatility while competitors flee. The principle: crises are opportunities for those who control perception, patience, and capital flow. Invisible arbitrage, leveraging hidden opportunities. Buffett doesn't just invest in companies. He invests in systems, information, and patterns. He identifies market distortions caused by fear, liquidity gaps, or regulatory changes. He deploys capital silently, often using Berkshire subsidiaries as intermediaries, creating layers of strategic opacity. This is the essence of arbitrage at scale, finding inefficiencies invisible to ordinary investors and exploiting them with speed, accuracy, and legal precision. The ultimate secret: thinking in systems. Buffett's genius lies in systemic thinking. Companies are not isolated. Each subsidiary, partner, and investment interacts within a complex ecosystem. Decisions are evaluated across multiple dimensions simultaneously: financial return, psychological impact, operational synergy, and long-term compounding. This is why his empire is resilient. Even when one sector falters, the network of entities, investments, and influence absorbs shocks and redirects capital efficiently. Most investors focus on linear gains. Buffett focuses on compound systems and invisible leverage. Lessons for viewers: translating billionaire strategies. Even without billions, there are transferable lessons. Mental OS upgrade: think in systems, not transactions. Psychological arbitrage: observe human behavior and market perception. Network leverage: build silent, high-value connections that amplify insight. Layered risk management: separate investments, assets, and opportunities strategically. Long horizon patience: let value mature while others panic. These principles allow ordinary people to internalize the mindset of a billionaire, even if their capital is modest. Buffett is not simply an investor. He is a psychological strategist mastering fear and perception, a network orchestrator silently influencing global markets, a master of systems